We're now going to talk to Jeff Winship. He's a senior loan officer with First Option Mortgage. And we're going to talk about, Jeff, we're going to talk about home ownership versus renting in today's market. And some of the things you're seeing as far as maybe taking a look at home ownership.
Yeah, I think that especially in this market, and the reason I wanted to talk about this is it's tax time. And I will say that I'm not a tax accountant, nor am I an attorney like yourself. So I want to put that disclaimer out there. And if anybody has any questions, they can call me at 952-278-9927 or jwinship@firstoptiononline.com. The reason it's a good idea to look at ownership versus renting is that obviously the interest rates are very low, but I think a lot of people are not aware that they could replace a rental payment with the same thing with home ownership, and with that comes there's a lot of advantages.
Well, didn't you were telling me earlier that one of the advantages might be the mortgage interest deduction versus the allowable income rent credit, and how those two kind of square off with each other. So
yeah, with the rent credit, there is a maximum allowable income of $57,169. So the maximum rent credit is $2,000. So if you're over that $57,000 threshold, you're not going to see anything on your taxes. Contrast that with a home ownership purchase of a home of $150,000. That's a $6,750 write-off that next year at this time you could be looking at that you don't have. We were also talking about the median price of homes at $183,000. That's about a $7,500 write-off that you don't have available through the renting.
So Jeff, if you're in that income range of $57,000 or so, is a median home $183,000? Is that in reach for qualifying for a mortgage?
It is in reach. It will depend on a number of factors. What we look at is what the proposed payment will be for the new home, as well as any additional obligations such as credit cards, installment loans, car payments, motorcycles, and student loans. So anything that would show up on the credit report. We look at those debts along with the new proposed payment, and as long as we're within the ratios, they qualify. And we just ran the numbers quick before we came on air, and on that $183,000, if you did an FHA loan with the minimum 3.5% down, the full payment would be about $1,381, which I'm sure you could find rent out there that's even higher than that. Now, for those that are thinking maybe this isn't in my reach, well, there's also down payment assistance available with as little as $1,000 out of their pocket.
What's the market looking like today? Andy was looking at those stats too, and the inventory.
I'm going to check your numbers to see if you're right on. I'm a numbers guy. So.
Well, I don't have the numbers, but from a general consensus, the inventory, of course, is very low right now, which for the buyers, that's important to know because it's a seller's market. And that's the importance of working with someone like myself that can sit down with you and review, make sure you are pre-qualified or pre-approved. The reason for that, it puts you in a position of strength. And the seller is also going to require that pre-approval letter, and the agents that you're working with, and that's one of the reasons to call experienced agents like Andy and Chris and their teams, they're going to require that letter as well.
Well, you know, in a market that we're in, I just was going to bring up a point that with the market we're in, we have inventory coming to market now. New people are starting to list. I know Chris and I both had several new listings coming on over the last week here. So the market is starting to come back. What we're waiting for is the spring market to wake up, which it's kind of on delay, and we're hoping it's a spring market because we are down a little bit. But what's crazy to me now, we still have about 13,000 properties on the market, right? And that's actually an increase year over year of this month, about 18%. So the houses are coming on. What's crazy though is the average price received on an offer is ridiculous. The average sale price is $183. The average percentage is 93.6% received of original list price. So I mean, people are asking for pretty aggressive discounts, and so on a $183,000 house, they're asking for almost a $12,000 discount on that price. So the buyers are still confused. Like I said, we've got a buyer's market in the heads of the buyers, and the sellers should be in a severe seller's market. But it's a confused marketplace right now, you know, so don't be frustrated. I'd say just keep at it.
But I think also what attributes to that original list price, I think is key there, is that I think some people are trying to be really thinking their house is gonna sell for a lot more. And you gotta make them a little more realistic too.
Well, and to that point, for the buyers out there, this market 4 months later is entirely different than what we've just gone through the last 3 or 4 years. So this notion that you can go out and discount a house, you can pretty much forget that in a buyer's market. You're going to have to figure out what they want to net and get as close to that number, and allow, if you're going to have closing costs and you want them to pay for it, you better add that onto your purchase price so that they're going to net that number. And if you do that, make sure that it's going to appraise at that value.
Mm-hmm.